Welcome into the Invest Well Show. We're going to talk just bonus segment today, short style for you, about consumer prices. The highest prices have been in almost 40 years. We're going to unpack it today on the Invest Well Show. All right, 40-year high. I know a lot of you out there are saying, Mike, I already know this. Listen, man, I'm going to the gas pump. I'm buying stuff in the stores. Maybe you're like me. I'm actually building a home right now. The costs of everything, copper, wood, all kinds of things have gone up way through the roof. In fact, it's interesting. The Bureau of Labor Statistics showed that December CPI rose 7% year over year, which is essentially the largest or fastest rise since 1982. A core metric actually rose year over year the fastest since 1991. So this is big stuff. These are things that are serious. Obviously, a lot of people, there's a lot of conversation around the Fed. What is the Fed going to do? The Fed has already come out and said that they are probably going to raise rates 3 times this year. I think there's a lot of analysts. I would agree that there's a great possibility that rates could rise potentially 4 times this year. So I just wanted to take a quick minute and share not only this thought, you're going to be hearing it on the news, but I also wanted to talk about how does this affect you, the end consumer? What does this mean for you and your pocketbook and your day in and day out? Well, a couple things that I want to challenge you as far as tips to navigate around this stuff. So first off, I think it's important for us to determine what we actually need to buy and what we don't need to buy right now. So there might be some things that are bigger purchases or things that you'd like to do that you may not necessarily need to buy or have to have today. And by waiting, it could give you the ability to have some of those prices come down. So that's the first thing that you want to think about, right? So that way you're in a place where you're not overbuying or overpaying. We've all heard the story of people going and buying a home, and the home price is almost at all-time highs. In fact, I literally had a conversation the other day with a gentleman that bought a home basically in 2007 at the peak. And then in 2008, the crash happened and real estate came way down. He basically lost a lot of money. He was underwater, and it became a serious, serious problem. So you want to think about what you're doing as far as how you're spending money in relation to what's going on with the overall economy and the overall society. The other thing that you got to realize is as interest rates rise, right? Maybe you're in a place where you're thinking, you know what, maybe middle of this year or next year I was going to go and I was going to buy a car. Well, the cost of the car is more right now because of supply chain demand and all that goes with that. But interest rates are low. So try and evaluate what was the cost of the car before all of this stuff started to happen, and what is the cost of the car now? And if it's not that much difference, you may say, you know what, I want to go out and get it right now before interest rates rise. So these are important conversations, and I think it's important as you hear all these topics and terminologies and headlines as a consumer, sometimes we can become numb to the reality that all of this stuff comes out and we just continue to live our day-to-day life. My intention and really goal of this bonus segment is to cause you to kind of wait, press pause, wake up, think about what you're doing, think about the expenditures you're making, think about what you need or don't need, think about what you may need to buy that could potentially be pushed off a little bit later because you could save some money maybe as prices start to come back down. That's what will happen as interest rates start to rise. The demand for things will start to slow because money becomes more expensive. And then all of a sudden, what once cost $100 might cost $95 or something like that. So think about it that way as far as what your actual need is. The other thing that I would suggest is this definitely has the possibility of slowing down the economic engine, especially in relation to markets. I mean, we're at all-time highs. Another great time to step back and reevaluate where you are and what you're doing. By the way, if you did not listen to part 1 of the show talking about preparing your wealth for a market crash, make sure you go to investwellshow.com and watch that show. It was powerful, and it's the first show in a 3-part series that you're not going to want to miss. So listen, that was just a quick kind of bonus jump in. Wanted to share with you some of the things happening today, January 12th, that happened that we saw this price increase to the place of almost 40 years. And I wanted to give you some quick tidbit thoughts quick takeaways that you can say, maybe these are some ways and things that I can think about life a little bit differently right now. Hey, do me a huge favor. If you love the content here, I'd love your comments and feedback below in this Invest Well show. If you're on the page, if you're listening via podcast, we'd love your rating. We'd love your comments. Also, if you're watching via YouTube, feel free to subscribe to the channel. That way you get the next show as it comes out. And share these shows, whether it's podcast or video or investwellshow.com, wherever you're watching us, right? Facebook, LinkedIn, whatever. Share this with someone that needs to hear it. Sometimes we just need a second thought in our minds to say, I never thought about that. It causes us to step back, reevaluate, rethink, and hopefully make some better decisions on our financial journey. As always, my desire is for you to live on purpose so you can live with purpose. Listen, be blessed. Have a great one. Talk to you next show. Keep in mind, the information shared on this show is not to be considered investment advisory advice. For specific recommendations based on your situation, make sure you reach out to a professional, whether it be financial, accounting, tax, attorney, or whatever you may need to help you find the information necessary to make good decisions.